All right, let's get some more insight. We can speak to Victoria Scholar, who's a market analyst at IG, which is an online trading company. Joins us live now from London. Welcome to the programme, Victoria. The ferocity of this sell-off is pretty unparalleled, isn't it? And am I right in saying it's the speed of decline rather than the extent of the decline?
Yeah, I mean, it's a bit of both, really. I mean, just to put it into context, the FTSE 100, for example, is having its worst week since the financial crisis all the way back in 2008. If we look at the magnitude of today's declines, it's lower by about 3.2%. On the day that Lehman Brothers went bust, which was really at the height of the global financial crisis back in 2008, it was down by 3.8%. So it's really not that much less. And this is a crisis in terms of the markets that's gripping the world. We look at the Dow Jones in the United States, for example, it suffered its biggest points decline in history. That was on Thursday. And normally what happens is we see flows towards gold as a safe haven. But in fact, gold has also been having its worst day since 2013. And that kind of highlights the fact that there's nowhere to hide right now.
So what's the sense? What's the feeling? I know there's a great deal of uncertainty, to say the least, out there, but is there a feeling that it will correct itself?
I mean, that's really what makes a market, isn't it? There are some buyers and there are some sellers. There's one school of thought out there that says, look, we're down about 10% from where we were, or 15% in correction territory, as your reporter mentioned, from where we were just recently. That makes the stocks that I wanted to buy last week so much cheaper. Then there's other people that are saying, well, we're still about 80% above the trough when we were at the real bottom at the top of the financial crisis back in 2008. And that led to a global recession in 2009. So it's really difficult to say what's going to happen next. A lot of it obviously depends on the developments around the coronavirus, whether or not we get a vaccination, whether or not we manage to keep it relatively contained. And these are all sort of things that are very difficult to quantify.
I've got to ask you, there's always winners and losers in these situations. There have got to be some winners. Who's doing well out of this? I did hear that conference call technology is stocks in those companies has shot up.
Absolutely, it's true. There's a stock called Zoom Technologies that's been performing incredibly well, because if you think of lots of people are going to be staying at home, taking video conferencing calls rather than going into the office if more people are in quarantine, those are the stocks that are performing very well. Also, hygiene products. I've seen that sales of Dettol, a cleaning product, has been going through the roof this week, which is quite interesting. So I think it's those sort of healthcare sort of elements and then those technology elements that really have the potential to outperform. If you think about people staying at home on the internet, using their laptops a lot more, that's a real area that's potentially going to benefit. But broadly, if we look at sectors, it doesn't really seem to be any that have particularly been managing to buck the trend of the move lower.
Right, it's troubling but fascinating all at the same time. Victoria Scholar, great to have you put it in perspective for us. Thanks very much.
Thank you so much for having me.